It's going to be a crazy week ahead. There was an announcement made recently in the cryptocurrency industry that we believe will have a significant impact on price. In our opinion, it will serve as a healthy injection into the market. The general market could tumble because of all the current uncertainty. Since today's market gain was so extraordinary, we feel it's important to explain what caused it here at Data Dash. So, we want to discuss further the upcoming developments in crypto that have us feeling optimistic about the industry. So make sure to watch till the end. But before that, please go ahead and hit the like, subscribe, and bell button if you want to stay updated for more of our content as we move forward. But besides that, let's get started. The stock market went absolutely crazy these past few weeks. Bitcoin is up 2.4% and other cryptocurrencies are also on the rise. Amazon is up 4%. Google is up 4.5%. Tesla is up 2%, but still underperforming. Texas Roadhouse is up 3.5%, and cryptos are also up. The previous 2 weeks have been quite hectic, and we don't expect that to change anytime soon. We don't know when the bottom will be, but things are looking very good right now. So we've been purchasing steadily for the past few months. There's a lot of ground to cover, so we're going to set the stage for why the market is improving and why investors are becoming more bullish. There has been a great deal of uncertainty recently. The consumer price index was satisfactory. It wasn't bad, but it also wasn't very good. But just last week, a fantastic PPI report arrived. To put it another way, the actual rate of 4.4% is much lower than the 5.2% that was predicted. Even more remarkably, the PPI reading for January was lowered. Last night's market jitters were mostly due to concerns over the liquidity story. The situation in these banks is dire. There have been reports of major investors predicting a liquidity crisis as a result of the current situation at the world's smaller banks. Because banks won't be able to lend to small firms, GDP growth will slow this year and may be slower than it would have otherwise. In other words, this is the same as increasing rates. Economic expansion is severely hampered as a result. The problem with liquidity meant that even though we had great PPI, it didn't matter much. The news broke late last night that the Fed would grant as much as $2 trillion in liquidity relief to banks in the wake of the SVB collapse. To put it simply, we want to encourage you to continue lending to a variety of enterprises so that together we may all benefit from the expansion of our national economy. As far as we're concerned, this is fantastic news. At the same time, we saw a bailout for Credit Suisse, proving that governments are seriously supporting big financial institutions. Depositors are protected from a variety of recent failures as well. Hence, confidence in the banking sector has been restored. In addition, financial institutions can keep operating as usual. Nevertheless, there is some murky activity taking on elsewhere, including rumors that the government is essentially telling banks to stop doing business with cryptocurrency firms. In any case, this necessitates the market to develop explosively. As a result, the Federal Reserves will likely not need to raise interest rates as soon as originally anticipated because inflation is decreasing. Considering the PPI and CPI, we would likely be well ahead if we hadn't experienced so many cash flow problems. Remember that PPI is a leading indicator. Thus, a strong PPI this month bodes well for CPI in the coming months. In addition, housing is much behind schedule, which is why it contributed heavily to the CPI increase. So prices are beginning to level out, and the banking crisis appears to be resolved. Some people now believe that the Fed won't continue raising interest rates at a rapid clip since they've already damaged the economy too much. We mean, Surely, they don't want to constantly shattering stuff. Many people have been waiting for inflation to decrease so they can finally move on, and fortunately, this has happened. As a result, they are in a bind in which they can no longer raise interest rates at the same rapid pace. In essence, they've stated that they intend to hike rates by 25 basis points at their upcoming meeting, which is likely to take place next week. But we think that will be wonderful because it will be the last nail in the coffin of inflation and a very beneficial development overall. That's right. People no longer worry about their money in the bank, and the economy is thriving. Thus, employment rates remain low, a fact that reflects the Fed's dual mandate. It's safe to say they might have been more forceful with the stop if unemployment had been rising and inflation falling. Rates are slightly more likely to halt rate increases, but inflation is falling and unemployment is improving, so they performed their job. They want the inflation to be low and they want unemployment low. And now in crypto, especially, we have a really tremendous possibility for something in the next few days. In 1 week, we will see the largest airdrop in history with the launch of Arbitrum. So a lot of investors are going to get thousands of dollars, hundreds of thousands of dollars. Some of them, and what are they going to do with it? Well, we don't know about you, but if we were given, $10,000 right now, let's say our portfolio is worth $50,000 in crypto. If we got $10,000 from Arbitrum, we probably wouldn't keep it all in Arbitrum. We'd sell most of it, if not all of it, and put it into some of my top projects. Because we know that Arbitrum is probably going to dump because so many people are getting the tokens properly. Lots of people will suddenly find themselves in possession of this cash, and they will promptly dump it into their preferred cryptocurrencies, at which point we will learn which projects have compelling backstories thanks to the Arbitrum tokens that their investors acquired. We have our eye on a few different cryptocurrencies, all of which we believe will get significant investment this year. Now, of course, there's going to be a couple things between now and then. So the market could alter, but people will sell these tokens and buy other tokens. Thus, it's gonna be hectic next week. Given the current state of the banking industry and the resulting decrease in available liquidity, we believe that Bitcoin will continue to attract new buyers for this precise reason. Since a black swan, we've gained 25%. So this is all great news for cryptocurrency. Nevertheless, if the economy worsens or if there are further black swans, we might see a decline. Don't forget that a lot of money is flooding into the system thanks to recent events like Arbitrum, the Fed's injection of $2 trillion, bank bailouts, and other similar measures, all of which bode well for the cryptocurrency market. Cryptocurrency prices, at least, show a strong positive correlation with total system liquidity, suggesting that an increase in total money supply should lead to higher market prices. First, we don't want people to go crazy and invest all their money because we think the market is going to do well. We've been busy using dollar cost averaging. That seems like the most sensible next step to us. But ultimately, the choice is yours to make. Now, based on these recent events in the crypto market, what do you think? Are you feeling even more engaged to invest in crypto? Or do you think there are still some things to watch out for in this market? Let us know your thoughts in the comment section below. But other than that, thanks for watching. This is Data Dash. And if you enjoyed watching this video, then go ahead and hit the like, subscribe, and bell button to continue seeing more of our crypto news and tips for you. Thanks again for watching, and we'll see you in our next video.